Welcome back to the Accounting Working Group podcast. I'm your host, Stein Smith, and I am thrilled to be joined for our July episode with my co-chair and chair of the Tax Working Group, Rob Tobey, who is a tax partner at Reid. Robert, happy to have you.
Thanks, Sean. Good to see you again, and it's always a pleasure to talk about some of my favorite topics, which are cryptocurrency and digital assets.
Absolutely. Love it. And to just help our audience, right, get a better handle on you and your firm, would you mind giving just a brief introduction of yourself and your firm?
Sure. I've been practicing for a long time, and I generally practice. I deal with very complicated tax issues, and I've always dealt with them throughout my career. Now I'm spending a lot of time dealing with high net worth individuals and their corporations and what they invest in. And I got involved with the crypto world back, I think it was in 2016 when I met Ron at I think it was a Prime Global event, and it's like, it was like, oh my God, the world's changing. Better learn. I learned about this stuff, and I've been working with WSBA ever since. I sit on a number of committees, the one with you, especially with the Tax and Accounting Group, where we're trying to continue to understand the accounting and tax rules with dealing with cryptocurrency and digital assets. I'm also on the AICPA's digital asset and task force that we continue to discuss rules with how to deal with a lot of reporting and taking position and coming up with positions with how to deal with reporting crypto assets in NFTs and mining and stakes, and it's pretty exciting. It's pretty exciting. I mean, this is terrible. I mean, I'm a tax guy. I mean, I get excited about really boring things, and it's just because it's on the cutting edge, and it's ephemeral. It's always grasping in the dark. And that's what really drives me in working with this and working in the crypto industry, because it's kind of make up your rules as you go along, because there ain't very many of them.
Absolutely right.
Yeah. So my firm is Reid LLP. We're a firm that is a New York-based firm. We're a mid-market firm. I'm the partner in charge of tax services. So I have a pretty broad, I
think a mandate probably the right word, right?
Thank you. I was looking for. Thank you for that word. I have a pretty broad mandate of what I do, but yeah, I really like dealing with what I do. It's kind of to me exciting, and it gets me to going every day. So.
Absolutely. No. And I think that really sort of, that sort of ephemeral cutting edge and having the ability to, if not influence, at the very least sort of, learn and create as you go, really has drawn in quite a bit of people into blockchain, tokenized assets, crypto asset areas, right? And yeah. And to, obviously here at the WSBA, I mean, there are many groups doing a lot of great stuff, having a lot of events. I do know that recently Ron has introduced his weekly crypto recap and update, which I would say is definitely needed at this point, because it seems like every couple of days there's another earth moving, IRS notice, court case, items like that.
Well, yeah, I mean, let's move into the topics, because I mean, we have time. Two big things that are coming along don't necessarily deal with the IRS yet, but they could be, and they're dealing with the SEC. The SEC is going to next Supreme Court session, or whatever you call it, starting in October, there's going to be a hearing about the SEC's policies about making law through administrative law justices, and whether the SEC can actually do that, and rather than having to go to a federal district court, having someone who's appointed that doesn't have the authority of a regular judge, that's just appointed as an administrative judge, an administrative law judge, making decisions. And one of them is with respect to the SEC. And if the Supreme Court says no, you SEC, you really cannot pursue some of your judicial and regulatory rules through an administrative law judge, you have to go to a regular federal district court. It could change the way that rules are set with respect to securities, with crypto and other types of things. So beware that could really have a huge impact on what we're dealing with crypto and how it's being treated rather as a security. And you're going to go, in some ways, I guess I would rather go to a federal district court rather than an administrative law judge to go have someone adjudicate what we're dealing with here. So look out for that one. And the other one that kind of whacked us just recently was the Ripple case, where that one came out in the a federal district court judge said that Ripple is not a security with respect to individuals buying and selling on a platform, where it is a security with respect to hedge funds and other institutional buyers and sellers, which kind of makes me scratch my head, about just on a security side, how can you kind of break it apart with respect to individuals and with respect to institutions? In institutions, it's still a security. And what the hell is it with respect to someone else that's an individual? That it's a fundamental. Again, it's ephemeral. It's in a hole. We don't know how the SEC is going to treat it. Is it going to be a currency? I don't know. Is it going to be a security? Don't know. Is it going to be a commodity the CFTC talks about? Don't know. Is it going to be property the way the IRS treats it? I don't know. No matter what the SEC does, it might not have an effect for federal tax purposes, because the IRS says that it's not a security. Clearly it's not a currency, and it's not a commodity. It's still property. So it'll be interesting to see in the long run, because remember, the SEC can in fact appeal this. And my recollection is there's going to be another bite of the apple on that case with respect to the institutional side. Where this is going to headed, where it's going to end up, and what in the heck is currency that's being treated on a platform where individuals are trading? What is it? And I clearly don't know, but I don't know if anybody in the judicial side has any idea either. So those are the big ones. Those are the big ones.
Yeah, no, and I'm going to come back to those, but also I learned something new each day, and today I've learned that there are actually different types of actual judges. So I had no idea that there are different types of court judges, and then non-court judges either. So that's good to know. Just on a general knowledge basis, for sure.
Yeah. Be careful be careful who you call judge. I mean,
exactly. And so to try to sort of pop the hood on this Ripple case, which pretty much across the board was seen as a win for the industry, right? In terms of trying to sort of put a stop to what has been perceived to be pretty much a onslaught out of the SEC.
Yeah, I kind of sort of. I mean, I'm kind of sort of where I'm really saying, yeah. I mean, it's kind of like you're hitting a double, you're not hitting a home run, because remember, it's still a security for institutional investors. So if you're investing through a fund, if you're investing through some others, it's still a security with respect to those people. It's a mutual fund. If you have it affects them. If you're an individual investor, it now what the hell is it? That's where it's focused on.
And so, was there any extra information in the court opinion that sort of added some context as to why that bright line had been drawn? Or no?
In reading the case, I have not seen what their underlying theory is. The theory of the case, I haven't seen that yet. I'm looking for somebody to come out with an analysis of it. I just don't know yet. And I wait for bated breath with someone to opine on why the court did what they did. I just don't know.
Interesting though. And so a other huge headline story that has been, again, sort of perceived by the industry as a positive step forward, or a possible positive step forward, is the submission of a spot ETF application, right, by firms like Fidelity, BlackRock, Invesco, right? So on the one hand, having sort of these titans of the industry sort of weighing in now might be positive, but on a tax side, on a compliance side, how are those headlines going to change the current conversations that really should be had with clients who are considering buying crypto through these funds?
They're still going to be treated like anything else. It's like you're buying shares in a mutual fund. You're buying shares in any type of property before. It's like if you buy an ETF, or if you buy a share in a mutual fund, or if it's still treated as property. If you own property under the Internal Revenue Code, it's taxed as short-term, long-term capital gain, depending on your holding period. There's only one beauty that is a quirk in the law with respect to crypto and digital assets, is when you have a property or a security, and I'm going to change now to security. So let's say you have you own stock and you sell it for a loss. You can't acquire it within 30 days. You have to hold it. You have to not reacquire it for greater than 30 days to recognize the loss. Crypto's a little funky. I mean, you're not subjected to these watch sale rules where if you sell crypto at a loss one day and you rebuy it the next, you still get to claim the loss on there. That kind of takes it away. I mean, it's one of the nice things about digital crypto asset. You're not subject to the wash sale rules. Congress has talked about taking away. It won't affect it whether you put it into an ETF or not, or into a mutual fund. You're still not subject to the wash sale rules. It's just property. I mean, the IRS is very. This is the crazy ass thing about this thing. I mean, you have all these types of digital assets, right? You have NFTs. You've got crypto coins. You've got all sorts of other things in other types of assets that are derivatives that are traded against it. It's at the end of the day, the rules are very simple. It's property, and there's not been any greater expansion of how to deal with crypto assets issued by the IRS, which drives us practitioners crazy.
And to just add some extra sort of breath here, Robert, has there been any movement or any conversation on the whole crypto staking issue? Because I know that firsthand there are very strong views on sort of both angles on this question. So I was wondering.
It's interesting because we bring this up every time. So it's part of the technical resource panel that I sit on, that really is the umbrella group for the the Digital Asset Task Force. We meet at least twice a year with the IRS, and sometimes we meet in between. And the IRS is aware of this, and they have not issued any guidance with respect to it. I mean, I'm sure our listeners are aware of the Jarrett case, where the Jarretts in Tennessee said that when I stake my crypto and I earn something, I don't have to recognize the revenue. This is the short, this is the Cliff Notes version.
Sure.
They don't have to recognize income until they sell it. Well, the IRS has its current position is, well, if you stake and you return and you get something in return, you do have to report the income on it currently. The Jarrett said, no, that's not the rule. I really recognize nothing that's taxable until I sell it. They were smart. They didn't go to tax court, which is another court that we, with other judges.
Oh man, come on, Robert.
Sorry, not killing it. So they went to district court, which is different. So they paid the tax on following the IRS rules. Mm-hmm. They sued for a refund using their theory, and the case was dismissed in its district because the IRS did not want to have any law made upon the Jarrett's case. The IRS acquiesced on the Jarrett's position and offered them a refund, and that's where we stand today. The Jarretts gave it, they went up to bat, they took a swing. It was kind of a walk, or they didn't really strike out for themselves, but it was kind of it was a big nothing, and they won. But there still is no law with respect to what you do with staking income other than you're supposed to report it. If you're earning staking income and you want to take a position that's different, you really need, other than reporting the income currently, you really need to talk to your practitioner and see if you want to disclose it on your tax return, that you're taking a position that is not necessarily the IRS's, and see if you can fight it out with them to push them to get to an answer. I will tell you that the IRS is not contemplating issuing any regulations anytime soon with respect to cryptocurrency. There are some laws that are in the hopper that have been there for a while that are going nothing. Legislatively, I just don't see I don't see anything changes coming along, nor do I see any the IRS issuing, other than maybe FAQs, frequently answered questions, or other guidance, really telling us practitioners or those who trade in here, really giving them any more guidance or a path to follow when you're reporting this, other than maybe refining its definition of what a digital asset is, or what cryptocurrency is, or how to answer the question better on your tax return. Are you trading in a cryptocurrency? Are you trading in digital assets or cryptocurrency? Scant guidance from our taxing authority.
So the 1-2 punch of not ultra clear guidance, and on the other hand, quite a few open lawsuits are probably the two dominant trends in terms of how U.S. agencies are tending to treat crypto.
Yeah, and I think you're going to see more. I'm going to see the predominance of the court cases are going to be with respect to the CFTC and with respect to the SEC. I have not seen, other than Jarrett case, and I keep my eyes open, I haven't seen anything come out with respect to any other positions with respect to the IRS and challenging its position on how things are reported. I suspect it'll be coming along sometime. It's to get into there are two ways you get into the tax court, there are two ways you bring a tax case to federal court. Is you can take a position on a tax return, not file the tax, not pay the tax, go to tax court, which can be a very costly proposition, but you do get you get, in certain cases, you do get to represent your case yourself. Federal district court, which is the Jared's did, where you have to pay the tax and file for a refund, is not really the best way to go. It'll be interesting to see where the cases pop up and what they're going to pop up with respect to. I think you'll also see some interesting things moving along with respect to. I think you're going to see the most thing. This is just a conjecture.
Mm-hmm.
I think really where you're going to see the most movement is with people who lost money on exchanges with respect to Celsius and with respect to FTX. How you're going to deduct them and whether they're deductible at all. And you're aware, Sean, that there are people out there that are trading in these bankruptcy claims with respect to them, and
yes.
how those are going to be treated for tax purposes. It's just that's the one that I'm still at a loss with, and I have regular conversations with members of our committee and the AICPA Digital Task Force of really what do you have if you own. I can tell you it's very clear. I can tell you
sure.
There's only one clear answer here. And this is
not one clear answer.
Yeah, this is not the good answer. If you had, this is the bad answer. So I can talk polarity here on the bad answer poll. If you had money in your IRA and invested it through FTX, it's gone. When you lose money in an IRA, there's no deduction, there's no nothing. Your money's gone. You can't. It's just gone. I mean, you can't. It's in a tax exempt growth vehicle. You can't claim a deduction for it. You're just never going to get any income from it, which is the suck answer of the world. So if you're somebody like that, my advice to people that I've talked to about that is you may consider selling your bankruptcy claim, because that might be the only way you get some money out of the deal.
Wow.
So that's the only clear answer I have with respect to claims for Celsius or in FTX in particular. It's the other. There's so many moving parts, and there's so many different ways that people invested into FTX, and I believe into Celsius also, that you got to determine what property rights you had to begin with, what you exchanged, and at the end of the day, the worst. Here's another thing, Sean, that really bugs me about this.
Mm-hmm.
Is tax law was written for an old economy. It was written for a hard currency, fiat currency, manufacturing economy, which we're not in anymore. And the rules in a lot of cases just don't lend themselves to what's being happened in a digital asset economy, nor in an intellectual property economy. And that's where people like me, that's what this is, the exciting thing is, it's I keep trying to, put that square peg in a round hole all the time, to try to get something that was written originally. Think about it. Now, you've been doing this for a long time. I've been doing this for a long time. The code was originally written in 2013. It was redone in 39, redone in 54, redone in 86, and kind of redone again. And it really never is adapted to, it adapted to an old industrial mining, not mining in a crypto sense,
actual mining with
actual
dirt
mining,
shovels,
it really is out of step. And God bless if we're ever going to get really a revamp to bring it into the 21st century. You and I are probably going to be long gone out of practice if that ever happens. But seriously, that's what taxpayers are dealing with, and I think that's also the struggle with the FTC and the CFTC is they're dealing with their old rules too. It's just the way that people do business today in general. The laws are. Think about it this way: you're trying to still use the steam engine. And people are not using steam engines anymore, and you got the rules where you're trying to tinker with the blueprint of the steam engine to fit what how the economy is moving along today, which is it's the mode of transportation has changed.
That's a great parallel right there. and to wrap up our talk here today, right? Because I'm sure the two of us could go on for hours,
We
but
could.
to wrap up our conversation, if I had to ask you for one, not prediction per se, but one sort of estimate forecast for, is there going to be one other big case or big event or big headline during the rest of 2023 that right now is sort of on the back burner, but that is but
Yeah.
is coming? Yeah.
I'm going to tell you what my sense is, and
Sure.
I want to see if yours is similar to mine, or
Okay.
if you have a different point of view. I think dealing with NFTs, what are they? What rights do they come along with? How are they going to be taxed? The IRS came out and said NFTs are collectibles, which are taxed differently than property, because a collectible is subject to tax at 28%, which doesn't make sense if you're trading an NFT that really represents a property right of a home, which is there's so many different types of NFTs. I don't think any of the government agencies that are dealing with these really understand what NFTs represent. What do you think?
No, and actually, I'm on a very close sort of thought pattern, and actually, I have a article forthcoming, which, as of the date of our conversation, it should be coming out within the next couple of weeks, where I and a co-author actually go through and talk about sort of the wide range of applications for NFTs and how really incomplete the current accounting treatment is for all these different types of applications, right? Because everyone hears the word NFTs and it's immediately Bored Apes or other sort of really buzzy, frothy applications.
Yep.
But to your point, there are a whole host of applications for NFTs, be it real estate records, healthcare records, educational records, portable ID, that really aren't even able to be comprehended by the current rules.
You bring up a good point. When you hit real estate, you hit a point where I can see title companies going away.
Yes. 100%.
Which doesn't bother me in the least.
It doesn't bother anybody.
Right? No, sorry. Right. Every time I look at a closing statement, it's like I go, "Yikes! I'm paying. I'm paying how much for a title policy?"
Yeah.
I can see recordings like it's. I know one of the leaders with the blockchain in particular was the state of Delaware in dealing with UC Uniform Commercial Code filings.
Mm-hmm. Yep,
and I can see NFTs being used for that. Great for securitization of really hard assets. I think is a really great use for it. You talk about HIPAA rules with healthcare rules, stuff like that. I can see patents having a strong. I can see that working really well with patents and other types of royalty stream rights with respect to royalty streams. I can see NFTs being a very valuable thing there, but that's why I think that's where I'm going to see your big. That's that if I'm going to predict in the 2024, that's where I'm going to see the most activity.
Yeah, no, and I would agree. And Robert, it was an absolute pleasure having you on the podcast. I will definitely have you on again.
Thanks,
it was
bud.
a real pleasure to find you. And if if folks are interested in more content from you and your team at Reid, are there any public resources for them?
Other than our resource, which is www.reidllp.com, I believe you can find. Here's the deal. Look me up on LinkedIn. Look me up someplace. My name pops up for all these things. I do take phone calls. I do respond to people. I do like to talk to this stuff. So you'll get an answer back from me. And if you just want to, if you have a question about like the economics for taxation, I'm willing to spend a couple, 10, 15 minutes answering your questions. I just want our listeners, our listeners, whoever they are, to get the right answer with respect to this. I'm going to finish with this. The AFCPA, because the rules are so screwy, is coming up with a number of guides for practitioners to use with respect to this. Our goal, I serve on, you and I are fortunate enough that we have resources we can ring up around the world to, to answer our tax questions. My concern is helping people who might have some basic questions to it, or the ASCPA's membership is about 65% firms of 10 members or less. And my worry, and that, I don't want to use the word worry, my desire for them is to have resources that they can use when they have clients to come to them that are faced with questions about cryptocurrency and other things, about just how to basically report what's going on and how to report accurately to avoid the never-ending IRS correspondence machine. So we're working very hard to provide resources for people to use, and my hope is that it gets out to the public also.
Well said, Robert. And the core point is that the most valuable commodity in any market is objective quality data.
Yeah, without a doubt.
Yeah. And again, Robert, it was a blast having you on. I'll definitely have you on again. And
anytime.
All right. Thank you.
Okay. I'll talk to you in August sometime. So be well.
Yes, be well.
See you.